The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
All right, folks, welcome on here to the Diagnostic Trading Hour. Let's check out where things are at right now. We have the S&P is down 1.5. We have the NASDAQ down 4.75. The Russell is down 10, and the Dow's up 20. Gold is currently down 8 points, and we got silver is it's a little bit positive on the day. It's barely, almost flat, but it's a little bit up right now. We got copper is pretty flat on the day. Looking across the board, we got oil right now. Oil is moving on down $1.42, and it's been pushing pretty low there. We got natural gas is down 1.4%, so massive move as well. Both oil and gas moving about 1.4%. We got corn down just $1.25, not a big move there. Soybeans, though, moving good, down 14 points. Euro dollar is currently down 99 pips on the day. Pound dollar down 115 pips. So massive move right there on pound dollar. We also have the Aussie dollar is down 20 pips with the euro yen down 38. US yen is currently up 41 pips with pound yen down 41 pips. So sort of on opposite sides of the coin there. A little bit of dollar strength and pound weakness outweighing each other. Looking on over at the dollar CAD, it is currently up just a mere 5 pips with the dollar franc showing it's up 64 pips on the day. So let's see what we got going on. We had a little bit of news this morning. Nothing, major, nothing rocking the world there. But we did have a little bit happening, so we can dive into that and look at, some of the ways that it could have been played, was played, etc., and hopefully help you put together some game plans for your own trades. And what we got this November 1st here, All Saints Day, checking out this morning. And we had the, British PMI report came out. So let's take a look at the impact of the PMI, how it played out. So going over here to the pound dollar. Now, pound dollar and pound yen were both possibilities in this play. And it took a little while to play out, but not too long there. So again, we had two of them, and the pound yen was sort of my preferred one. But let's check out both of them and see how it did. And what we talked about yesterday was pound dollar. We had an expectation that it would, the average high to low range is 65 pips, but we want to take into account the reality that only half the time does it hit 50. So when it moves big. But, if it doesn't move, obviously it doesn't move that much at all. And so we go right on over here to the 530 report. We take that on down to the low here at 730, and we can see we got about 50 pips. So it hit that 50% average. And so you should have been able to, especially based on where it expired, you should have either got a small profit, you wouldn't have cleaned up on the trade, but a small profit or a break even. Now, if you chose a later expiration, like if you chose to go in on that trade and, choose, you could have chose as late as 7 o'clock on that first one right there, then, it just depends, like I said, it depends on how it worked out because it didn't really move right off of the report. And so you got to put all the different pieces together. There was a 6 a.m. one. Obviously, not that much move there either. But it did have a nice move within 2 hours. Unfortunately, since they moved it back, because it used to be at 4:30, so we had more time. They moved it back. We really didn't get that move until like the last 20, 30 minutes on the trade. So that was a pretty rough one. Now, if you went in and did the midnight trade, I talked about that last week where you hop in a little bit early. Then, what kind of movement would you have potentially got on the trade? So let's check that out. If you would have hopped in around, say 11 or, we'll just say midnight on the trade and just put on a straddle and basically went to sleep and it expired at 7 o'clock, you would have got about 30 pips. So you're talking probably, break even on one side, loss on the other, maybe a little bit of profit on that one side, like maybe like $5, lose, say $20 on the other side. So not just a massive mover, but the pound dollar did keep moving. The big action, of course, happened, like I said, this morning at 7:30. So when we really saw it start to take off. Now, the results on the numbers that came out were 56 on an expectation of 56.3. And it's always important to be aware, of course, of what those expectation numbers are and result numbers are. because we really we didn't hit the high or the low. We were looking for like a 58, 0.5, 54.5, and we didn't hit either one of those. And since we didn't hit either one of those, that's your first clue. Hey, you know what? I want to get out of this trade as quickly as I can, ideally at a break even, which means I may take partial profit or, get out of break even on one side, break even on the other. Or if it pops enough, maybe I'll get out of break even just on one side, and the other side is a free leg at that point because I recovered the risk on it. Now, we also had another report come out this morning. We had the U.S. ISM report. And but before I hop into that one, I do want to go through and just do a quick review on the pound yen since we talked about that one. And let me load that up over here. It'll take just a second. There we go. And so on the pound yen, what kind of volatility do we get? Because remember I said it usually has a little more volatility on the report. And if we go over here, again, our 2-hour stats, it worked out, okay. We only got 41 pips. We actually got more volatility. I guess if I choose high to low, it would have been about the same because that's what the stats for is high to low. But basically got same or similar volatility there on the pound dollar. So pound yen didn't really give us anything more than the pound dollar did this time around. Looking on over and checking out the U.S. ISM report. Let's look at that one. And we're looking at potentially pound dollar and euro dollar on that report. So first we'll go on back over here to pound dollar, and we'll look at the report numbers. So number came in at 56.4 on an expectation of 55.3. We were really hoping more for like a 57, okay? 57.3, 57.4 number on that. So it's about, only a point off instead of 2 points off. I was hoping to get, that's your fundamental shock. That's where you make your money, all right, is when they're wrong. And they're wrong a lot. So when they're wrong, when I say they, I'm talking about the economist who forecast the number. So let's go in and see this number right here. It came on out. Like I said, there's a couple ways to play it. I talked about a little bonus way yesterday. I talked about the potential butterfly since it came out at 10 o'clock. But let's look at it. And, of course, the trade, could be over or not over, depending upon what expiration you chose. But, yeah, the 10 o'clock report. And then if you chose 11, you really didn't get any move at all. Okay, right there, you only got 26 pips. All right, if you chose the 12, you got 50. Okay, about 50 pips or so. Depending upon exactly what time you got in. You probably got in, a few minutes before on the trade. So 40 to 50 pips on that. I guess if we took it all the way to the low. Now, obviously the day isn't over, and if you chose the 3 o'clock, you still have more time on that. But I really wouldn't be playing. I wouldn't be planning and playing on that. I'd be, just going for break even. Again, what's my biggest clue on that is the number didn't really have a surprise. It didn't have a fundamental shock. So you should have got, decent enough distance to be able to hop out of the trade, put the money back in your pocket. And, it may continue going down, but is it really worth it at this point to play a continued decline in the pound dollar when the whole reason you were playing it to begin with? Now, if you're trading, you could hop in on technicals and keep going short, but you're going on fundamentals of looking just for a breakout either way quickly based on the news, and you didn't get that. And you shouldn't expect that since there was not a fundamental shock. Again, PMI coming in at 56.4 on an expectation of 55.3, and we wanted it to be 2 points above or below that number. Okay? Well, that is, and if you're wondering what I'm talking about, if you're new to the show, then what you want to do is check out, we'll call it NADEX. It's the NADEX Exchange, the North American Derivative Exchange in Chicago. It's registered, regulated by the CFTC, just like the CME futures are there. And hop over on TFNN, click on the NADEX banner. And on the NADEX banner, you can find out more about what this is all about. But you also can get a demo account. So, demo trading account. Just go right there, sign up for it, activate it. Literally takes, 15 seconds. Unless you're just a really slow typer, because all you're doing is you're putting in your username, your first name, your last name, your phone number, your email address, and you click apply. And then a few seconds later, check your email. You're going to get an email with your password so that you can log in to the account and access it so that way you can start demo trading. And, when I say demo trading, what am I talking about, with this news and demo? And if you notice, they didn't really care what direction it went. That's just like, we just wanted it 2 points above below so that we could get a nice move. And that's because we're doing what we call straddles. So we go in on the market and go in here and just to show you an example, if I hop on over to the pound dollar, okay, and we'll pull this up, and this is the spread scanner. You can check that out as well over on TFNN, and scroll on down here. You'll see the pound dollar, and you can combine different contracts. Now, it's going to be a little more difficult right now just because of where the actual market, is, because it's been moving so much. But there are a few potential possibilities. So, like right there, let me look at this contract. We can probably find. Yeah, that's not going to be low enough. We got to get them as close as we can to where the market is, and the market is currently trading on the pound. Let's see here at 5916. So we're gonna, there we go, 5920, and there's a 5920. Notice the floor is 5920. So now I'm gonna go up here and I'm gonna find any ceilings with 5920, and now I have some straddle trades I can do. And one thing I love about using the scanner is when I'm doing this, I'll find comparable trades to see if there is a better trade, okay? And check this out, 5920 to 6070. They're the exact same width. One expires at 2, one expires at 3. The reason is the one that expired at 2 started at noon. They're 2-hour-long contracts. Now, there are ones that are like 5 hours and 7 hours and 23 hours and all that. But in this case, these are 2-hour-long. And the other one started at 1. And that's why it's 2 hours, so it goes to 3. So you have more time on this contract. You have about the same break-even distance. And when I say break-even, I mean at expiration. Okay, like distance from the underlying market for the price of the spread. And if you go right here and we look at the max risk, okay, that right there is telling you $1 more gets you another hour. Well, if I get another hour to potentially be right on a trade, and I only have to put up another $1 or $2 on the trade, well, that's a no-brainer, because that gives me more time to be right. And it's not like I'm just exponentially increasing risk here. I mean, we're talking, $9 versus $10 or $11. On the trade combination, let's see, 9, 10, 12, about 12 versus 16. So percentage-wise, you could say, yes, that's very large. But time-wise, that's invaluable. For just a few more bucks to be able to have additional time, no-brainer. It's going to help you easily see that without having to click all over the place, because there are a lot of contracts to look at. There's the 3 p.m.s that started at 7. There's the 3 p.m.s that started at 1. There's the 2 o'clocks that started at 1. So you have all these contracts all coming together, and this helps you see that whole lineup to help you find the best potential contracts for you. Okay? And this way, you know if it goes up or down, then you could potentially be profitable on it. And that's what the risk-reward graph shows you. If it goes down, what's your P&L? If it goes up, what's your P&L? How do you lose money? No, if it stays flat. It doesn't go anywhere. All right, we'll stay right there. We'll be right back after this break.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzamento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, going back here to the Diagnostic Trading Hour. So anyway, so I was just going over that example with you on the pound dollar of, finding contracts that expire at the exact same time and using that to your advantage. Another area this really comes into play is over on the binary scanner, especially on Fridays. Okay? So on Fridays, the reason I bring this up is because we scroll down here, and let's say we're looking at, let me bring up a Forex pair for us. Drop everything else off. There we go. We're going to say euro dollar. Okay? And we look over here at the 3 o'clocks. Notice how we're going to have all these contracts, these weeklies, these dailies, and these intradays, all in the exact same place. They're all expiring at 3. Well, if you're over on the Nadex platform, then you know what you're doing? You're clicking 3 different places to see that same information, and it's constantly changing. Okay? So if you're going over here and you're clicking on, let's say I said Forex binaries, if you went to euro dollar, you'd be looking at, the dailies, the intradays, and the weeklies to try to, get all this information together. And, their strikes are they all work the same way. They all expire at the same time. They all expire at 3. They're all on euro dollar, but they're different strikes. And so by doing this, you can see, is there an edge in any specific contract? maybe you're, for $1 more, you could have, 10 more pips of, profit, or a massive difference in risk. And it's amazing how sometimes these will actually, every once in a while, they'll overlap. And you'll see, even like right here, and this isn't really a big edge at this, moment, but I have seen some where we've seen some pretty good edges. But look how we're seeing like $3 on the weeklies, but $2 on the dailies, even though they're further apart. Again, that really isn't going to help you at all because you'd have to buy both. There's really no bid. Nobody's going to sell anything because the bid-ask spread, say, being $3 or $4, nobody's going to go in and take a loss to let you trade. So there's no profit on the other side. But you can take a buy. Somebody will sell it to you for at least a couple dollars profit potential there because it's a high probability trade. So a market maker will take that other side. But look at it, $2, $3, $2. So obviously in this case, there's no reason to really use the weeklies. If you're doing some crazy out-of-the-money strategy. So, right here, you're seeing $3, but, $2 and then $3. If you're looking at this trade, you could pay the same amount for a 525 contract as you'd be paying for a 511 contract. Well, that means the market has to move 11 more pips for you to be profitable, in addition to that 511. So, why would you pay more money to make the market have to move further for you have to make a profit on the trade? There's no reason to do that. And that's why I like, especially like I said on Fridays, when they all line up together, because you can see that big combination there. We go down, we can look, and I'll scan them every once in a while. We'll just see something that lines up. There's some random bid that somebody has out there. But I'll look at it, and every once in a while, we'll see them skewed. Like they'll literally be backwards. And, you might even be able to pick up some ARB. Who knows? So I've done it a couple of times. And we'll see if we can find any. Looks like today they're a little more efficiently priced. So maybe they caught on, huh? But you go in there, and literally sometimes I've seen them where they're like, right here, like it'll be $70. If I can sell that for 70 and, buy this one for, whatever, a certain price, if you can go in and put the buy and the sell together, then you can have a pretty cool deal. But the biggest thing is just to make sure you have the best contract instead of having to go between the daily, the intraday, and the weeklies. And some of these, they're really tight. They're like a tick apart. So, it lets you easily find that best contract for your trade. All right. Well, let's go over a quick news roster. I'll throw some deviations up here so you can check those out for the day. And they've been pretty spot on so far. But what do we got coming up? Well, looks like tomorrow we got non-manufacturing PMI on China. Not a big deal. You got Sunday. You're going to have the daylight savings time shift happening here. So don't forget to roll your clocks back. Losing an hour. Okay? And so Canadian also having that bank, the bank holiday over there in Japan. So retail sales will also be released Sunday night, adding to a little bit of volatility. Not expecting a whole lot, but a little bit of volatility there Sunday night. Looking on over at Monday, we got construction PMI coming out of Britain. So might have some volatility on that one. That'd be a good time to be checking out the pound dollar. And then we got the bank rate and cash rate, interest rate coming out of Australia on Monday. So definitely look for some volatility. We'll look at the stats and how to play that one on Monday afternoon here. And when we get back, we'll wrap up the week and we'll check out where the markets are at on their deviations to see if there's any plays in the mix. Stay right there. We'll be right back after this break.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Andy Hecht, the host of the Commodities Hour, recently launched his newsletter service, the Technomental Commodity Report, and only 6 weeks in, Andy has already recorded a triple-digit winner. Andy advised his subscribers to purchase a long-term call option at 46 cents on July 11th, and then sent out a special update Friday, August 16th, advising his subscribers to close that position at $1.40. That's a 204% profit in just 5 weeks. The Technomental Commodity Report by Andy Hecht is released each Thursday morning, and right now you can get a month-long free trial to this subscription while locking in the low introductory rate of only $39 a month. Andy Hecht has been a commodities trader for over 3 decades. Let his experience work for you. Sign up for your month-long free trial to the Technomental Commodity Report today at TFNN.com. Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, we're going back here to the Diagnostic Trading Hour. So we can go through and check out, wrap up this week, what's coming on up. We got Governor Corrado's going to have a little speech on Tuesday morning out of Japan, so expect a little volatility there. That'll be around 1:30 for you early AM traders. And we got the Frank CPI. That'll, 10 to 30 pip pop off the CPI number there is usually what we're looking for. And pound will have the services PMI. And we'll look over at the ISM non-manufacturing PMI coming out at 11 o'clock right here in the U.S. If you're a New Zealand trader, be aware that they're going to release their employment change and unemployment rate at 5:45 on Tuesday evening. Looking down at the Aussie, we'll have trade balance, not a big mover, but again, you should help at least the market trend a little bit. And then we roll on into Wednesday. Wednesday, 5:30, we have the manufacturing production number come out of the British pound at 5:30 a.m. That'll cause some volatility. Then we'll have building permits come out of Canada at 9:30, followed up with the Canadian IVPMI at 11 a.m. on Wednesday. Wednesday evening, we're going to have the employment change and unemployment rate come out of Australia. So they have a lot of news coming out next week. And so that'll add to some nice volatility right there on the Aussie. And then rolling on into Thursday, we're going to have the interest rate and the votes and all that coming out of the British pound, along with their rate statement. Usually we get a very nice pop on the pound when that comes out. and it pops, and then it slows down for a little bit because then the European body is going to release their rate. Usually nothing happens on the ECB's minimum bid rate, releases at 8:45, unless there's some big shock and they change the rate, which is always possible. But the big pop is on the press conference at 9:30. That's when the big move happens. And it used to be 8:30, now it's 9:30, right there at the market open with the daylight savings time changes happening everywhere. And so expect some volatility when that press conference happens. Comes out in two parts. First part sort of like read off, second part's Q&A. And so you can get quite a bit of volatility out of the pound and the euro just following all the way through that. So you'll want to trade as late as possible on expirations as you can there to be able to take advantage of it. You're also going to get the advanced GDP coming out of the United States at 9:30. So that is obviously a big number right here in the U.S. So euro dollar ought to have some good volatility. We'll be talking about those stats next week. And believe it or not, this one is still actually a little bit late. So you'd think they'd be caught up, but it looks like we have a couple reports left. That one's 8 days overdue. So the advanced GDP. And but they also, preliminary, then advanced and modified and all that fun stuff. But anyway, so that comes out at 9:30 on Thursday. And then right closer to the market close there at 3 o'clock, the Draghi, the ECB president, is going to be talking. And so, of course, anytime he talks, people look for any clues. But I don't think that'll have much of an impact considering we're already going to have the press conference that morning at 9:30. So I wouldn't really expect much to happen off of that 3 p.m. talk coming out of Draghi. And then Australia's going to have their monetary policy statement. So why did they do or not do whatever they did on, earlier in the week on Monday, Tuesday there with their interest rate? That'll come out at 8:30 on Thursday evening. We're going to roll on into Friday, and then we're going to have a lot, and this is a big report. Okay, this is the one that I really, really like trading. And I've had quite a bit of success with. You're going to have some huge implied volatility, but a lot of times we'll literally see like 2 deviation moves when this happens. Okay? And it's when you get a ton of U.S. and Canadian reports happening at the exact same moment. And on Friday, next Friday at 9:30, the Canadian dollar is going to be releasing the employment change and the unemployment rate. The United States is also going to be releasing their non-farm employment change and unemployment rate. Plus, they have several other reports coming out, like average hourly earnings, the U.S. Core PCS price index, personal spending, personal income. But again, all these reports flooding in at the exact same moment causes a massive volatility surge, and you can usually see just a lot of explosion and happening, like I said, right there as the market's opening at 9:30. So just you're adding that to it. Market, index market opening up, stock market's opening up, and then having 2 different currencies simultaneously release heavy employment data at the same time usually works out to be a really, really nice straddle or strangle trade. Looking on over at the last part of Friday, we're going to have the University of Michigan Consumer Sentiment Report, and then Bernanke is going to do a little speech, policy responses to crisis, and it's going to be at the IMF, the International Monetary Fund, doing a conference for them. But that'll be after the market closes, so we won't really feel any impact on that unless he says something major, which of course will impact the market on Sunday, when the market opens back up there. Okay, so that wraps up our news possibilities. Let's go ahead and like I said, I'll dive into those more for you next week as they're coming up, so we can check them out. Let's go ahead and do a market wrap on where everything is, and as I'm scrolling through, if I see anything, we'll look for a trading opportunity on it. We got the pound dollar right now still sitting down at 1.5 deviations, not doing a whole lot. So you could look for a potential, especially this late in the day, butterfly trades that you could look at to see if there's anything there. Premium collection trades would be another potential trade to look at. So the way that you would do that, like I said, if I see something, we'll just we'll hop in and look at it. But just to show you, how would this work? You'd hop over here, say, hit the pound dollar if we're doing premium collection. You're going to do like your big moves in the morning on your spreads. A lot of times I do my binaries in the afternoon. And scrolling down here, see if we got anything that looks just, appetizing there. And I can also narrow down my results over here. I'll put in 65 to 95, and that'll basically limit it to premium collection possibilities for me. And what I can see here is I got a 59.11 for $89. But 20 minutes left to go. Not really that much payoff for that. And then we do have some other ones. We got a $30 one at 59.12, but that's like an hour and 20 minutes. So, that may be a possibility. If you wanted to look at potentially doing a butterfly, you could do like a 1-to-1, 59.12, 59.25, just as an example of one way to do butterflies in the flat part of the day. So let's go ahead and check out our other currency pairs, though. We got the euro-dollar. It's also down at the 1.5 deviation level. Look at that, how it's starting to bounce off as well. So giving a little more credence to that upside trade. And we got euro-yen, and it's moving on up with that euro strength, pushing it on up there. It's been moving up really since midnight. Pretty much turned around and started going strong. Looking at the pound-yen. Pound-yen is sort of hovering right there at half a deviation after coming down perfectly to 1 deviation on the day. We go down to, see, we got the pound-dollar. We just wrapped that one up. I want to move on forward to go to the dollar-CAD. On the dollar-CAD over here, looking at, looks like it ran on to 0.7, came on back down, and now just hovering right around the 0.5. So sort of some scalp trading or neutral trading territory at the moment. If we go into dollar franc, what we can check out is it's up at 1 deviation on the day. So it could be a really good call. We had a nice, pretty close to a volume spike right here at the 1 deviation level, and it's just been pretty flat ever since. So that would be, a case where you might go in and go, hey, you know what, I think maybe I'm interested in shorting. And so you can pull it up and see if there, is there anything that you might be willing to short. There's like a 91.36 premium collection trade. That puts you right up here. So you could go in, that'd be a possibility for a short premium collection trade. If you want to balance it out, you could buy a 91.20 a little bit lower and do a butterfly. So this is what I'm looking for, especially on Fridays when things go flat. Start looking for flat ways, flat markets, especially in FX pairs, to see if there's any good premium collection opportunities. Now let's go and let's dive in. Let's check out some energies here. We'll hop in and look at oil real quick. And on oil, we got to move it down to 1 deviation. It's sort of chilling out. Hasn't really been able to break lower right now. Just down there, up and down 10, 15 cents off of the 1 deviation level. Looking pretty exhausted. It's going to come into its closing of the pit here in the next 45 minutes. And so a lot of times I'll be looking at 5 and 10 and 15 minutes just to see if I can see anything that justifies, a potential trade setup. But again, you could look at, you could look at a butterfly on this because oil is looking pretty flat right now, along with everything else, the indices at least that we looked at. Let's check out gold. So it had a nice mighty move, but how far did it move? As big as that move feels, it was just a deviation. Check that out right there, 1 deviation, bounces back right off of it, and up to the 1.5. We get pretty close to a volume spike, maybe a volume spike. Let's see here, 24. What do we get on that one? We got 2,600 and 4,600. So not exactly 2 times the amount, but pretty nice potential volume spike trade there, and especially as you started seeing the pullback. And, if you think about the 10-minute method I teach, okay, which is like the bar that closes above. All right, so if you were, let's say you did play the bounce off of the 1 deviation, the bar that closes above it, this is where you'd be trailing your stop. So this is one way to look at this, maybe a little bit different perspective for you. Closes above the deviation level, you have your stop like 5 ticks below, okay? Well, at that same time that it does it, you notice down here, this is close, it's not exact, but it's close to our volume spike trade that we like to, do. And so since that's close, okay, and then, so if it does come back down and breaks this, maybe I want to go short. If it breaks where I'd put a stop loss if I was going long. And so my short trade, though, doesn't have to be like some big far out of the money trade. It could just be a pretty close at the money or in the money binary when it breaks that stop at a close expiration. So in this case, you could have went in, going for, like, say, the 2 o'clock expiration, looking for anything, really above, I'd say 13, 14. On the strike prices there, okay? And but it's wrapped on up now. Actually, 1:30 expiration, sorry. So you would have been able to be profitable on that. Would have been a nice setup for you. And good short trade. Going on, and let's look at silver. So on silver, wow, look at that. Oh, you don't see that too often, right? Nice and flat. Not really nice, but I'm not a massive silver trader. If you like trading silver, you can trade it over on the Nadex as well. And let's see, what else do we have? We could look at, we could check out copper. And copper did have a nice run, at least up to about 0.7. And we've got about a deviation from the high to the low. Just not a straight perfect one deviation, but again, high to low deviation move. So not a bad move on copper. But you have to be trading it early, because ever since then it's just been flat. And if it's flat like that, especially later in the day, what do you got? You got butterfly trades. Go and just trade those range-bound markets over and over and over again. And so that's, when people come in, they're like, well, what strategy should I do? And I'm like, well, what market are you trading? When are you trading it? What are the market conditions? Because, to tell somebody, hey, you should do a trend trading strategy when the market's flat, well, that's just obviously not a good idea. So it's good to have different plays in the playbook. You got your, flat market plays, such as like if you're in football, you got your goal line plays. All right, you got your trend plays, you got your Hail Mary passes going on, you got your swing plays, you got your runs, get your first downs going on. So you have different plays based on different market conditions. What's happening in that market, what's the news, is it flat, how are the other markets comparative looking to that, which play can you pull out of your playbook to best take advantage of what's happening, instead of going, okay, well, my signal says go short. Well, yeah, but if the market's barely moving, how much are you really going to make? So it's good to combine the two pieces together, especially if you can do something like premium collection with directional. Then you get sort of the, you could almost have the best of both worlds, because now you have the ability to go in and make money with the trend, but if it's going really flat like it is now, you can also make money with just time passing by. And we've all been in those trades that seem to take forever. And that's why I like premium collection so much, because if it's taken forever, that's okay. I'm still making money in that process. We got the S&P. It ran on up, went on down, filled in that gap. Really nice. Oscillated right around settlement for quite a while, and is doing a bit of a pullback right now at the moment. The Dow was sort of the laggard of the group, so it took a while, and it got within like a couple ticks, so just a few ticks of settlement. And like I said, that settlement was a little bit odd. I don't even know where they came up with it, but because you don't even see the prices on the chart. So it's a really odd settlement number. And this is straight from CME's website, 15,477 for today. But every once in a while, you get some just weird settlement numbers in there. And this one makes sense. This is where we were trading, like right around 415. But if you look over here, around 415, we're trading up here. We didn't even get that low. So I'm not quite sure what happened. Where that settlement number came from. So if you want to use the regular number where the market actually was, it easily filled it. But nevertheless, it still came within a few ticks of the posted CME settlement price, which is what's used for mark-to-market and everything else. If I was in an option I got exercised on, I might be a little upset if I didn't want to be there. But let's see. We got the S&P, and we'll cover that one up. Let's check out the NASDAQ. So right over here on NASDAQ, we got to move up to 0.5, down to settlement. It is pushing. It's coming on back up to its settlement. It's oscillating around it. Hadn't been able to really push down. So looking like it might want to try to finish in positive territory today before the market closes. So it's working its way back up. And we got the Russell. Let's see where that's at right now. It moved down. It's pushing up. It's trying to get back up. We'll see if it makes it up by the end of the day. But it came down quite a bit. And thought it might hold it, but it let it go. But now it's climbing. And we got back up to 1090.7. So pretty nice climb after that drop all the way back down to 1084. And it's right now, though, that half deviation, look at that. That's just in the way. So we'll see if it can clear that hurdle. If it can hop past that hurdle, then, may move on back up towards settlement. Do a little run right here at the end of the week. All right, stay there. We'll be right back after this break.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Basil Chapman has just announced that he will be hosting a one-day online master trader class. Friday, November 8th, Basil Chapman will teach you the essential fundamentals he uses when trading the market with his Chapman Wave methodology. Included in this full-day online master trader class is 1 month of Basil's daily newsletter service, The Opening Call, a $128 value, as well as a copy of his CD book introducing the Chapman Wave methodology, which usually sells for $249. Join Basil Chapman for this powerful one-day online master trader class Friday, November 8th, which will be archived if you can't attend live, where he'll give you a complete understanding of the Chapman Wave methodology and how to apply it to profitably trade any market in any time frame. For all the details and to reserve your spot while taking advantage of early bird pricing and saving $200 off the regular price, visit the front page of TFNN.com today.
Have you subscribed to the Gold Report yet? On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.69% profit to an incredible 48% profit in just one equity. Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began. And right now, you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber as this volatile gold market makes its way back into positive territory after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial today by visiting TFNN.com.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks, come on back here to the Diagnostic Trading Hour. So we're doing a little wrap up over here on the indices, checking them out. Like I said, Russell right there fighting with the 0.5 deviation level, trying to see if it can punch on through. We'll see if its counterparts can help it do it. Now, this morning, me and Tommy, we went over a trade, did a live trade right here on the show in the Bull Bear Binary Hour, the show that we do every Friday morning. And Tommy was noticing a few things, so I was going to do a quick wrap-up on that trade for you. And, I was just questioning, going through and making sure I understood exactly how he called it. I looked at it as more of a gap fill, but he saw the volume analysis, both of us be able to benefit from the trade very well. And he said he's going to fall on down 17, 54, 53, 50. He was holding on to it, and I'm sure he took a nice profit. He had like 25 contracts, I think he was doing on it. And we had like an $18 risk on the trade and per contract. And so I hopped in there and pulled a few $100 out in like 10 minutes, like right on the drop. It was pretty sweet. Well, what he was noticing was he was talking about how we had this volume right here on the 10-minute bars. We had this volume right up here. The market pulled on down, and again, we had some decent volume right here at the bottom. Okay, so somebody's really buying this thing up, pushing it up, filling those orders. And then it climbed up, and then as you can see right over here, we had really weak, this is a big spike, but really, really weak volume on that spike, on that breakout, which gave you, by the way, another great short trade. So you could have went in and went short on that low spike breakout there as it fell and turned around and came on back down. And then you had to get massive volume again right at this same level, right at this 252, 253 price level. Well, this morning, market runs up, comes on down with that strong volume again, right at that same level. And if we go over here and just sort of draw this out for you, so you can clearly see, going right over here, and then grabbing this right down here. It's massive volume. And so we were looking at the show this morning at 10, and he's like, thing went up on weak volume. It came back up here. We didn't come anything close to where the volume was over here. He's like, this thing's going to pop right back down. So we go in, and I'm looking at it. I'm like, you know what? I like that trade because that's also a gap fill, so let's go for it. And so he goes short, I go short, and thing just starts flying down. Another punch, and he talks about, hey, it's going to need to, break through. To break through this level, it's going to need some pretty strong volume. It had some decent volume down here. It did break through on that settlement, but I didn't just keep going. But either way, it was a great trade with a lot of profit in it. And then now it's starting to pull, like I said, pull on back up. And we'll see where it ends. But it looks like the markets are trying their best to end positive for the day. And it looks like NASDAQ, I know it was really, it was working on it right there. Still trying to get up there. It's got a few points left to go to end on that positive side. And again, we'll do a quick wrap up across the board. We got the Dow. It's working towards that 0.5 deviation level, but not quite there yet. Got close. Just sort of getting close on a lot of deviations. So we'll see if it can move on back up. And the Russell just oscillating right there. But like I said, trying to work to see if it has enough oomph to break through right up here at 1090.9. And it has broken it. We got 1091.1, so we actually have broken it now. But now we got to break it with some volume. So if we can break it with some continued volume, you see here like where it breaks the level and you get some continued volume, that helps it keep going. We just don't want to see it keep declining across the board, or else you'll look at a potential, reversal on that trade where it could turn around on you. All right, so that gives us a wrap up there. As far as any kind of trades, there's a lot of cool ones always sitting there in the market. You just got to be ready to take advantage of them. And if we go over, let's see. I want to look at one more thing on the S&P, just see if something shines out there. Because, like I said, we were looking at that all those volume spikes earlier. But it looks like it's just oscillating right around there. So, anyways, we got a lot of opportunities. Hope you're taking advantage of them, and I look forward to seeing you next week right here on the Diagnostic Trading Hour. Stay tuned. We have another great show coming up for you right after this.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.